Hi, this is Greg Kilpack. I'm going to show you how to make money in Roku stock. If you're trading it right now, there are some things you need to be looking at to know how to make money in the trade. I'm currently in it and doing really well, and I want to show you also where I think it's going to go from here. So let's take a look at Roku and what's going on. Roku obviously has taken a hit ever since Apple and Disney announced their own new streaming services. And when news broke for that it was going to come out soon, obviously the stock took a hit. It went from, what is that, about 170, over 170 down to 140. It's a $30 hit. That's a pretty significant hit. Okay, and then the stock went sideways for several days, about 5 days there. Now, I might have been tempted to buy in right there, but that's a rookie mistake. The reason is you want to wait for the next move to see where it's going to go. Right there, it's choppy sideways action. You don't know if there's really any major buying or selling pressure at that point. It could have gone either way. Honestly, I didn't know. And so you have to wait to see if there's going to be any direction. And if so, trade in that direction. You want to go with the direction where the big money is pushing the stock. So if you missed, a sell short order here or here, then right there would have been the place to put it after the new direction is showing. I did not do that. Okay, I was not wanting to do that, so I just didn't place the order. I didn't feel good about it. Okay, so on September 20th, this guy by the name of Jeffrey, if I can pronounce his last name, Lordzerzak of Pivotal Research Group initiated coverage of Roku with a $60 price target. That's less than half what it's currently at. Personally, I think that's a PR stunt. But anyway, the stock did react to that news by dropping from this price of about 128 in 1 day down to below 110, about 108. So that's a $20 price hit right there. And it kept going down. Now, I've done research on Roku. I know it's a great stock. It's grown a whole lot over the last couple years, like at least fivefold. And I was positive on it. So I've been looking for a place to enter it. So the stock's going down and down and down, and I just don't know. After it bounced back up, we're at about the same level there. Is it going to go down from there or up? I wasn't sure, and I was waiting for the signal to enter, and I got it on this day. That is, October 7, 8? I think that's the 9th. I bought it at 114.77 on that day, about halfway through the day there, middle of the candle. And it was a very good spot to enter because right now I'm up about almost $40 a share. And I'm thinking it's going to go higher from here even, but we'll see. It's in a choppy little area at the moment. So why did I pick right there to buy it? Because of the gap. And a little bit increased volume, that was helpful, but mainly the gap. That's a sign that some big players are jumping back in to gap it up after such a big hit. Because from here all the way down to the low, that's about 1/3 the price of the whole stock. Now, yes, that is a big hit to the stock, but it's not that big if you consider the stock is up 4 or 5-fold over the last year. Okay, that's a relatively small pullback, considering it was something like 25 or 30 bucks a share a year ago. In fact, let's take a look and see. Okay, 1 year ago, it was within the past year, it barely came close to touching 25 bucks a share right there. Wow. So 30% is not that big a pullback when you keep that in mind. It's still 4 times higher than it was within the past year. Okay, so anyway, I bought it on this day, and then you've got this news, this uptrend, and then the news came out right here, some other bad news. I'm not remembering which one that is as far as which news announcement. But what did they do? They pushed the stock down another $20 a share. And clearly, they're doing that so that they can buy it again at better prices. Because it went up something like 7 straight days in a row. And within a week and a half, they had it up from 120 to 160, a $40 move. Okay. Clearly, when you see that a stock gaps down and immediately starts to reverse like that on an already very strong stock, it's another great sign to be buying. If you hadn't done any trades through here, I think I would have bought it right there on that day, just for confirmation. And I probably would have put my stop right about there. So you need to buy the number of shares that's appropriate for that level of risk, maybe $10 a share loss if it decided to go south. So maybe that would be 50 shares or 100 shares or whatever is appropriate, maybe 5 shares for you if you're not a big player. But that's how you do it. You follow the chart first. And now, what's going on? After this great big move, the stock is pulled back just a tiny bit. It might get a little choppy. I'm predicting it's going to go up to at least 170 within the next 2 to 3 weeks. I'm holding on a little longer. If it starts dropping below, say, 145, I think I'll probably get out and take my profits. But I really think it's got more room to go up because it really hasn't pulled back very much from the highest point right there, and it's close to their all-time highs right there. This stock is still very strong. And by the way, fundamentally, everyone seems to think that big players like Apple and Disney are just going to pounce on them and that they're going to have a lot of problems. But Yahoo Finance, one of their analysts, what's his name, Dan Cowley, I think it is, he said in a video that Roku is going to do really well because they're a platform. Other services often offer their services like HBO Max through the Roku platform. Roku is the largest platform for streaming in the United States, believe it or not. They have something like 41 million devices, different types of devices through, I guess, maybe it's the website and TV and streaming. Anyway, they have bigger exposure than anybody else, and they're probably going to profit with new streaming services coming out because some of them will be on their platform. And also the streaming media sector is growing very, very fast. So by and large, all I know for sure is that Roku is still growing very fast in spite of, what people are saying, in spite of Apple and Disney joining the sector and joining with their own services. Roku still looks like it has room to grow. Plenty of room to grow. And that's what people are saying at this point. And the smart money knows that. That's why every time they push it down, they buy it right back up. So that's what's going on. Might even get new highs out of Roku, 175, 180 within the next month or two. So that's what's happening. I hope that helps you. Always watch volume. Volume is one of the key indicators, and it's pretty simple to use. Hey, if you want lessons and want to learn more about how to really trade like a pro, send me an email. TraderGreggK. That's Trader, GREGGK. I've got 2 G's at the end, at gmail.com. Look forward to hearing from you, and good luck in your Roku trade.